What's going on, everybody? It's Stas here. So the stock market got slammed today, guys. S&P 500 down 56 points, down 1.6%. The Dow Jones down over 400 points, down 1.4%. And the NASDAQ 100 got hit the hardest, down 1.8%, down over 215 points on the day. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over a bunch of stocks here that I'm watching and looking to buy, many of which are reporting earnings this week. And I also want to share with you guys what I personally did today, what stocks am I involved with, and in general, where my head is at right now as a trader, as an investor in this very volatile market ahead of the election here, which will likely keep the stock market very volatile. So if you guys find value, hit the like button for me. Make sure to subscribe to the channel. Check out all the free links down below, the Discord chat, the Facebook group, and if you guys want some free money, check out the WeBull link. All you have to do is deposit $100 and you get 2 free stocks valued up to $1,600. So guys, let's get right into it, and let me tell you, it was not a pretty day today. S&P, NASDAQ, Dow, Russell 2000, they all pretty much downtrended for the whole day. Literally, guys, the whole day. Take a look here. And mind you, we saw the futures market green yesterday, and this goes to show that hey, the futures market flip-flops, right? Sometimes the futures could be green on Sunday night heading into the morning, and then all of a sudden the market takes a turn for the worst. And it happens the flip side too, right? Sometimes the futures are red, and you might say, oh, it's going to be a red day, then all of a sudden the market rips higher, which is why you can't always rely on the futures to really indicate where the market's going to go the next day. And that happened today, right? Futures were up and the market tanked. So S&P opened up at about 35, actually more like 34.90, ran up to 3,500. And notice, guys, we actually failed breaking out. This is very bad for the bulls. We failed breaking out of the highs from Friday, right? Friday's highs were around 35.15, and the other one, which was a lower high, was at around 35.07. And notice, again, today we opened up at 34.90 on the S&P, and we ended up peaking at about 3,500. So the second we failed to break out of those highs from Friday, the market pretty much tanked, right? It tanked. You guys can see it for yourselves. Lower high here, and then we pretty much downtrended and hit a lower low. And what that's telling me is, guys, here in the short term, in the past couple of days, the past 1, 2, 3, 4, 5 trading days, the bears are still in charge, especially because we took out 34.50. You guys can see here that was a level of support, I believe, from last week on Thursday. We double bottomed at 34.50 and rallied. So the fact that we blew right under that, that's not good for the bulls. And the fact that we honestly took out 34.30, we closed under it, and we actually hit 34.20, that's not good either, because 34.30 is another big level of support we've been talking about here on the S&P 500. But notice, on this hourly chart, you guys could argue that we're still uptrending. I mean, we are, right? Technically, we are. You guys can see, yeah, we broke this uptrend, which we held last week momentarily, which is not too good. But overall, we're still holding the 180 SMA, technically at a higher low from this previous one from back on the 6th of October. So in the short term, guys, yeah, the bears are winning on the 5-day, 5-minute, no doubt about it. But when you pull out a bit on the hourly chart, it seems like this is just a healthy pull down, and we've been calling out for this pull down, guys, for the past couple of videos. I mean, actually, no, before that, actually it might have been the week prior to last week, right? Because the S&P got very overbought, the whole market did, and we were talking about how we need a pull down, and now we're finally getting it. S&P's down about, from its peak a couple days ago, it's down about 3.5%, so that's pretty healthy in my opinion. And take a look here at the futures. Again, the futures don't always indicate what's going to happen, but they're trading up. That's a good sign, at least for now. S&P futures are up 15 points points right now, up 0.45%. NASDAQ futures are up about 0.5% here, and the Dow futures are currently up almost 100 points here, up about 0.3%. So what that's telling me is that, hey, we're starting to rally a little bit above 34.30. That is a good sign, but don't get too excited yet, guys, because tomorrow and the rest of this week, we have to see what happens at 34.30 and 34.50. Tomorrow, let's say we do see a bit of a relief rally, which the futures are showing right now. We might end up going up to 34.50, and we might have to retest that. If we get rejected at that resistance at this point, we could be going lower, right? But if we break out of 34.50, we might see some sort of short-term relief rally like we saw last week when we hit that lower low. You guys follow me here? We might honestly see some sort of relief rally tomorrow due to the magnitude of today's sell-off. That's just my honest opinion, and I'd love to know, honestly, guys, what do you have to think down below in the comments? And when it comes down to the Dow Jones, take a look. We broke a big level of support today at about 28,400. We blew right through it. And you guys can see we actually ended up holding right around 28,200 as a support, which was a support on the Dow Jones last week. So it's very simple. On the Dow, let's say we gap down tomorrow and we break 28,200, a clear break, we might end up seeing a rally from there. Actually, no, excuse that. If we break 28,200, we might go lower, right? But if we hold it, we might see a relief rally up to, let's say, 28,400. So keep an eye on these support levels, guys. It's going to be very important in determining direction for the rest of this week. And when it comes down to the NASDAQ 100, take a look here. We blew right down below 11,700, which was a big support from last week. Now it's looking like we're filling that gap down to 11,500, which we honestly called out before the big sell-off, right? When the markets were overextended, I was like, guys, listen, 12,000, 12,200, it's just not a healthy level. We ran there too quickly. And I was saying we might end up pulling down to the mid 11,000s, right around that 50 SMA, and it seems like we're doing that. So, guys, these levels could be bought up. Who knows, right? People might buy the dip here as the markets have taken about a 3 to 5% haircut between the Dow and the S&P over the past couple of trading days. So I'm here to honestly feel it out the next couple of days. I didn't do much buying today. I took some profits, but if we start to show support at these levels, I might start to nibble some shares because, quite honestly, guys, I think we might rally off of these, points, maybe for a relief rally or maybe even for an extended rally. We just have to see what happens. So let me know down below in the comments, guys, what are your thoughts? And the sell-off really could be attributed to stimulus. There's still a lot of tension there, right? There's, a lot of back and forth. And guys, this is going to last, right? Are we going to get stimulus before the election? Are we going to get it after, right? We know that Pelosi set a 48-hour deadline for Tuesday, which is literally tomorrow, to get the stimulus done. And they were agreeing to that, her and Treasury Secretary Steve Mnuchin yesterday on Sunday. So, guys, I mean, if it were me, I would do stimulus ASAP because the Americans need it. But we all know it's going to be used as a political play. And who knows what's going to happen? Again, I'm not a stimulus channel. I'm not going to go deep into it. You guys can go watch other people for that, but we're just going to focus on the stock market here. And again, let me know down below in the comments, what do you guys think? Are you buying the dip? Are you letting it go? And just give it more wiggle room to see what happens the rest of the week. Let me know down below in the comments. Now, let's talk about what I personally did today. Again, I didn't buy anything, but I did end up taking some profits on Intel, INTC, and we saw a big pop on Intel today. Intel stock spikes into the green after Wall Street Journal report is near a $10 billion deal to sell its memory chip unit. And from my understanding, This is obviously very good for Intel. The shareholders are very excited about it, and it's a $10 billion deal. I mean, that's no joke, even for a company like Intel, which is a larger cap company, and the stock's loving it. We're up a good chunk. We were up to about 56.23 on this news, and quite honestly, once we saw this spike up, I got out, right? It wasn't at the top at 56.30. I believe it was at around 55.25 is where I put my limit order. I got filled there. And honestly, guys, this might sell. It might be kind of a buy the rumor, sell the news type of deal. I mean, we're already seeing it. It got pumped up. Then people sold off the news. Now we're starting to rally in the aftermarket hours. And quite honestly, guys, I'm not regretting locking in Intel. I told you guys my price target was right around $55-56. And plus, on top of that, they're literally reporting earnings in 3 days. And I'm not too big on holding trades through earnings. So this was kind of like the perfect scenario for me to get out of the position. So I ended up locking in a pretty good profit there on Intel. I've been in since $52.25. So if we do some math very quickly, a basic little percentage here, we can see from 52.25 up to about 55.25. That was around a 5 to 6% profit there on Intel. And when it comes down to my other positions, I'm in EA still. Electronic Arts, I'm in this one at about 133, so I'm down a little bit on Electronic Arts here, but I'm not sweating it, guys. I'm holding this one for a couple of months at least, probably more like a couple of weeks. I have a price target at about 145, and I don't mind holding it, until it gets towards that level. I truly believe it is, or else I wouldn't be holding the stock. And like I've been saying, guys, I'm playing offense, right? I have money in the market, but as we're getting into the election, I'm also playing a lot of defense. I have some cash on the sideline. If I were to guess at this point, maybe like 40 to 50% of my swing portfolio is in cash right now because I want to weather the storm. Look at the VIX today, the volatility index, the fear index. It was up almost 7%, right? So volatility's creeping up. And that's a great time, in my opinion, to have some cash, right? So, and also, again, I'm still playing offense because I don't want to miss any run-ups. So I'm in EA still, and I'm also still in Apple. And speaking of Apple, this is getting close to another buying opportunity, in my opinion. And again, this is all my opinion, not financial advice. Do your own due diligence. But for me, guys, Apple, I'm very excited about it, right? I'm in at about 115. I've been holding on to this for a couple of weeks at this point. I locked in some profits earlier. I forget where, but it was in the 120s last week. I locked in some profits, and now I might end up buying more. I mean, if we get under 115, which is my cost basis, like I just said, I mean, if we get anywhere into the 110s, low 110s, I mean, I might just add more. But take a look here. Apple at this point seems like it's holding the uptrend on the 4 hours, so I'm not too sure if we're going to go much lower. And it really just depends on the whole market. And again, there's going to be volatility, so it's really anybody's guess where the market's going to go. And I'm still in Workhorse here as well, guys. WKHS, which ended up going down. It went down about 2.5%. Down about 60 cents today, and I'm personally in at about $24. And overall, it seems like we are holding this $22, $21 level nicely as a support. At least we have been the past couple of days. So that's giving me, I don't want to say bullish vibes here based on the technicals, but it's not giving me bearish vibes either, the fact that we're holding that 22 level. So we'll see, guys. If we gap out of this and start to go mid-25s, that could be a sign of a breakout here and some sort of rally in Workhorse. We just have to watch this 5-day, 5-minute and really see where it's going to go over the next couple of days and whether or not it breaks this little consolidation phase that it's been in. So overall, that's what I did. That's what I'm involved with right now. Not crazy amount of positions here. Again, I'm in a lot of cash. I'm in EA, Apple, Workhorse. I'd love to know what you guys are doing. Let me know down below in the comments. And when it comes down to some earnings reports, we're only going to talk about one today. IBM International. Is it? I should know this, guys. Is it? It's International Business Machine. Yeah, I knew that. IBM. And this was exactly why I don't like holding through earnings. We talk about this, right? IBM was holding 125 nicely. Let's say you were to get in before earnings. Now it's down to the 120 level. So you'd automatically be down $5 per share. Let's say you were to get in at 125, and now it's down to about 120. So that is a reason why I don't like holding through earnings. And they reported $2.58 versus the $2.58 estimated. So they came right in line there with EPS. And revenue came in at $17.56 billion versus the $17.54 billion estimated. So they're pretty much in line with expectations. And I'm not too sure why we're trading down. Maybe it could be guidance. Maybe it's just I don't want to say lackluster earnings, but they didn't really break, beat by a big margin. So we're trading down a bit on IBM here. So I'm going to be watching it. If we're able to recover at about 120, maybe back into the mid-120s, maybe I'd consider a position. But quite honestly, guys, I want to see that consolidation phase before I get into a position. So IBM didn't do anything crazy in terms of earnings, and I'd really like to see it in the mid-120s before I take a position. And when it comes down to some other earnings to keep an eye out on for the rest of this week, we have Lockheed Martin reporting tomorrow. That is ticker symbol LMT. We also have Snapchat reporting tomorrow, which is ticker symbol SNAP. It did well today, up about 3%, up 80 cents, showing some strength here in the midst of the market selling off. So I like that. Although Snapchat is pretty high in terms of the price on the 4-hour chart here, it is at a high at about $29. We could still see a rally even further, even though we're at a high. And it really depends on those earnings. And if we get some decent earnings, we might see a bit of volatility tomorrow before the earnings, because I do think they report aftermarket. They do report aftermarket. So we'll see, guys, here with Snapchat. And also we have Netflix earnings tomorrow, ticker symbol NFLX. This one's holding 530 pretty nicely. It pretty much broke even today as tech in general, I don't want to say collapsed, but tech did poor today. So that's showing signs of strength when it comes to Netflix as well. So we might be able to get a play tomorrow leading into earnings if there is enough hype around it, which, hey, we could see some hype, especially if the markets see that little bounce back kind of, relief rally, like I said earlier in the video, which is a possibility in my opinion. And we have a bunch of other earnings, guys. We could talk all day. We have Tesla, Chipotle this week, Verizon, which we saw that big spike during the Apple report, the Apple, event rather, right? We saw the spike as they were talking about 5G, Verizon, and so forth, but Verizon ended up selling the news, right? We saw the big pop. It's been selling off since then. So we'll see what they do when it comes to earnings. We might be able to get a short-term play there, especially if $58 big resistance right now is able to break. So watch out, Verizon. Also, Coca-Cola here, ticker symbol KO. I'm liking this anywhere above $50. So we'll see if it holds 50. We might be able to get a move up to $53. And a lot of people have been asking me about AT&T. AT&T, guys, has been struggling. It's literally about to hit a low here, and that's scary a bit because we really haven't seen a recovery ever since the whole crisis started. I mean, AT&T was almost $40 a share, went down to 26, it popped back up to about 33, and it's just been getting crushed ever since. And we understand they've made some bad fundamental decisions as a business. They're losing a good amount of money due to those bad decisions with the whole cable company and the cable division and so forth. So at this point, guys, am I looking to trade this? Probably not. But from a long-term perspective, I might add some shares here. I mean, I own it in my M1 Finance portfolio. If you guys want to check that out, go to my playlist series. It's the M1 Finance series. You guys can check it out for yourselves. But I own it as about 1 to 2% of my portfolio. So, hey, I might add a little bit more here because it is a nice dividend play. The dividend at this point, as the stock's going down, it's got to be around an 8%, 7-8% yield, which is absolutely insanity. And we also have airlines this week, which you guys have to keep an eye out out on. We have Southwest, I believe, coming up. This is on what, the 22nd. We also have American Airlines, or was it United Airlines? Yeah, we have American Airlines coming up as well on the 22nd. We had UAL yesterday, or not yesterday, last week, and that was up about 4%. So watch out on these airlines, especially if we get a stimulus package, some sort of bailout for the airlines. They might go up in the short term. And some other stocks here that I want to talk to you guys about. We have ticker symbol CAKE, Cheesecake Factory. This is one that I've been buying. I got to check. I've been buying it in my Roth IRA since the low 20s, quite honestly. I've been buying this stock for quite a bit. I mean, I haven't been buying it recently, but I did buy it in the lower to mid 20s. And this is kind of one that I like as a recovery play when it comes down to restaurants, hotels, airlines. I don't own too many, but I do own Cheesecake Factory and Foot Locker. Those are my two, I'd say, recovery plays at this point. And honestly, I love Cheesecake Factory, guys. The product's amazing. Great pricing. The cheesecake is just unbelievable. The fat kid inside of me from a little kid comes out every time I go there, and I just stuff my face. I mean, you guys can relate, right? Cheesecake Factory is unbelievable. And today we got a price target raised from, I believe, UBS. It went from 26 to 31. So the stock popped 6% on the news. It was up even higher before. I think we were close to 10% in the green. We went to 33.50. Now we're selling off a bit until the close. So we'll see if this is able to hold this little uptrend. Now that we've pulled down, if we're able to hold $32 flat, that could be a point where, hey, we might be able to get in as a support is held, if it's held, which it is an old resistance here at $32. So watch out there for Cheesecake Factory. I like the momentum here. And another one that's just been getting beaten down is DKNG, DraftKings. And this is one that, despite it's in a downtrend, it's not really showing a confirmation of a reversal. This is one that I might just buy and nibble in a little bit anyway, right? Just to get my feet wet in it. And if it goes lower, hey, I might cut losses, add more, but I feel like it's been beaten down so much that it's time to maybe nibble into it. And again, don't buy anything based on my opinion. This is just simply my opinion. I mean, DraftKings down about 32% from its peak. I mean, it's holding that $42 old resistance as a new support. And you got to ask yourself, I mean, how much lower can this thing go? I mean, does it go to the mid-30s? I mean, at this point, I think that would just be ridiculously oversold. So I'm thinking DraftKings is going to see some sort of pop, a relief rally, and I kind of want to be a part of it. And let me know your thoughts down below in the comments. What do you guys think about that? And Upwork has been another company here that has been just going crazy. Upwork is one that you guys know, if you've been following my channel for a couple months at this point, we called this out back in August. Ever since they reported earnings, they had a good earnings report. The stock went up to $18 and it crashed back down to $14.15. This is where we were calling it out, $14-15. Now look at it a couple weeks later. It's up into the $20 range, just like we were talking about, guys, a couple months ago, right? And at this point, yeah, I mean, it's ran a lot. It's arguably a little overbought, but I feel like it still could have some gas left into it, because if we pull out on the 3-year chart, it's still about $4 off of the highs, right? You know, back from the beginning of 2019. And if we pull back a bit further, the 20-year chart, I mean, I guess you can't see it because the company's only about a couple years on the public markets. But either way, $25 could be where Upwork is going, and even higher, especially now as the move, we're moving from a more in-office space to work from home, freelancing and all that great stuff. You know, people use freelancing all the time for, you know, let's just say YouTubers, for example, for, you know, thumbnails, editing, this, that. You can hire people for customer service. You can hire this, that, the third. I mean, there's so much to do. So a freelancing company like Upwork is worth watching, especially in this state of the world that we're living in. And Uber, ticker symbol UBER. This is one that I'm a bit skeptical. We are seeing a bit of a double top here, triple top sell off at about $38, but we're also holding $34 old resistance as a new support. So do we end up breaking 34, 35, filling that gap up to 38? That's possible. That's kind of what I'm looking for here on Uber. That could be around an 8-9% move. And notice how we're showing some strength. We're up 1.5%, up 50 cents on the day today as the overall markets got smashed. And another great company here that did well today despite the markets getting smashed is Virgin Galactic, up 1.7%, up 40 cents. And you guys can see here on the hourly chart, we're holding 22.40 like clockwork. I mean, we pulled down, we held it twice today. We're rallying into the close of the market. We're trading at $23.15 after market hours. This is looking good to me, and I'm still going to be here and tell you guys my opinion that Virgin Galactic is going to $25. That's what I personally think. I think that's the short-term price target, and if that breaks, let's say they have a successful test flight coming up, in the next couple of months. Let's say Branson goes on a trip to space, comes back successfully, God willing, right? Hopefully everything goes smoothly. Virgin Galactic here, it's going to be above $26, $28, I believe. I think if we break 25, we're going straight to that $28 level, which was the resistance from back in the middle towards the end of July. So watch out here for Virgin Galactic, guys, and also Visa. Visa is one that is down about $20, $22 off of its high here at $217. You guys can see we're right around 195, which has been an old resistance, right around 195, 198. We're looking to maybe hold that as a new support at this point. I think if we do, it's likely to rally, I'd say, to 202. And take a look here. Look at this wedge that we're in. If I zoom in a bit, let's say we hold 198, which is likely. We're up after hours on Visa. We might see that pop to 202. And from there, if we break this little wedge, we might fill the gap up to 210, which does give it about, from this point, let's say to 210, maybe 5 to 6% upside. So I'm very excited about Visa. I'm watching it here, ticker symbol V. And an MJ company went bananas today, known as Canopy Growth, guys. We pulled down. We held 1780 a couple days ago. We held that very nicely. We rallied up today. We broke 1880. Now we closed right under $20, which we've been rejected at last week and a couple weeks ago, back towards the end of July, beginning of August. So if $20 breaks here, I know CGC is overbought, guys, but with the hype around decriminalization around you-know-what, which could happen here, especially if there's a Biden victory, right? With the hype behind that, we might see a pop even higher, from $20 to $21. That's the next gap that could fill, and even higher from there, guys, which I know it sounds crazy, but it could happen with stocks like these that get very hot easily. From 21, maybe we go to $23. So watch out for CGC here. And the last one we're going to talk about, I mentioned it earlier, they're reporting earnings this week, is Tesla. TSLA. I'm watching the squeeze here up to 460, right? We're seeing a big resistance at 460, but we're also holding an uptrend, getting tighter and tighter up into that resistance. So I think eventually we might see a big squeeze above there, right? So 460, that could be a breakout spot for Tesla. And me, guys, again, I don't like holding through earnings, so I'm not going to buy it before earnings. But after earnings, we're likely to see volatility where I might be able to come in, you might be able to come in to make some profits. So overall, guys, that's it for this video. We went over a bunch of stocks. If you guys enjoyed it, hit the like button for me. Make sure to subscribe to the channel and check out all the free links down below, the Discord chat, the Facebook group, and don't forget to claim your 2 free stocks from WeBull, valued up to $1,600. All you have to do is deposit $100 and you get 2 free stocks, and I also get free stocks, guys, since it is an affiliate link. So I'll catch you all in the next video. Thanks for watching. As always, guys, be safe out there. Peace out.